So, Cashbook account, just the continuation of what we are doing. So we want to create an account for Cashbook. So enter from the, which is the question, enter the following transaction in the cash account of Mr. James. So Mr. James has given you all the transactions he has made throughout the month of February. So he's telling you to enter a Cashbook account. So what do? You open a Cashbook account. You open a Cashbook account. You know, this is the credit side and the debit side. Draw a line. And let's take the transaction one by one. February 1, cash in hand. February 1, cash in hand. As we have said, the principle of double entry, that if it's increasing in value on that card, you have to debit cash. But if it is reducing, if the cash is reducing, you credit it. So when you have February 1, cash in hand, it means there is something, there's a value in it. So cash in hand. February, put the date, February 1, perhaps we put Mr. James to know that it's Mr. James' account. February 1, that's cash in hand. That means that's the amount he has. As at February 1, that means as at January, it was having, as at January 31st, he was having 3,000 naira, which he now brought down. To February. So balance brought down from January 31st to February 1, 3,000 naira. February 2, cash to Shegun, he gave Shegun cash. So February 2, gave Shegun cash. So you write Shegun. If you are still examining the principle of double entry, we'll have just opened another one, Cashbook account 500, but we are only concentrating on cash account this time around. Cashbook 500 naira. Cashbook 500 naira. So February 4, cash sales. So he made sales. That Mr. James made sales on February 4. So it shows that cash is coming in. Cash is coming in on February 4. February 4. Cash sales 1,000 naira. Cash sales 1,000 naira. So he made a sales. He made sales of 1,000 naira. So cash is coming in. Cash is coming in. Then February 6, cash purchases. So he purchased, that means cash will be going out. So if cash is going out, it means the cash will be reducing. The value of your cash account will be reducing. February 6, cash purchases 1,005. February 6, purchases 1,500. February 7, bought stationery. So if you buy stationery, your stationery is increasing, while your cash, the amount you used to buy that cash, will reduce. So since it's reducing, your cash is reducing. So February 7, you come to the credit side of the cash account. February 7, stationery you bought is 100 naira. So, and February 8, paid insurance. So because of that, insurance is increasing while your cash is reducing. So you still come to this same February 8, and it comes to the credit side, February 8, which is insurance. Insurance 600 naira. February 10, paid wages. So Your wages will increase, but we are not opening those ledgers, but we are concentrating on Cashbook alone. But that means you debit your wages account and you credit your cash. You credit your cash by 500 naira. By 500 naira. February 10, your wages, you paid wages, 500 naira. And lastly, February 12, cash sales. So cash sales. So on February 12, you made another sale. So as you make sales, your sales account will reduce because your sales has reduced in value, while your cash will increase. So February 12, made another sales of 600 naira. So you now have to balance it. You have to balance the account. You have to know how much is now left and everything. So I guess this side will be bigger than this side. So let's first of all do this side. So 3,000, 1,000, see that is 4,600. This place too, 4,600. But you now have to balance. So what is now the balance that is left? Balance. So this is 2,000, 2,12732. 32 minus 4,006. 32 minus 4,006, and so we'll be having 1,004. So this is your balance of cash left with you after all the money that come in and all the money that go those money that went out. At the end of it all, you have just 1,400 naira left. So balance brought down, and this is what is going to try a balance, 1,400. This is just a simple way to create your cash account. Simple way to create your cash account. That's all. Next one we'll be looking at trial balance.